We all have a desire for the latest electronic gadgets. Smartphone is a clear example. In 2008, there was 139 smartphones being sold worldwide. And in 2020, it is estimated to be 1.5 billion, guys. How will Frontken Berhad benefit from the growth of the consumer electronics and electronics industry as a whole? Hi everyone, I'm John from the FIRL Guys and welcome back to our channel, the best place for long-term stock investors. In this video, you're going to learn about Frontken's corporate background and history, its business model, its latest financial results, and some of the key things you need to consider if you want to invest in it. Before we begin, do remember to give this video a like. If you're new to our channel, click the subscribe button as well as the notification bell so that you know there's a new video out for you. Let's begin with a quick overview of the corporate structure of Frontken Corporation Berhad. Frontken Corporation Berhad, or FCB, consists of 5 subsidiaries. They are Frontken Malaysia, Frontken Singapore, PT Frontken Indonesia, TTES Frontken Integrated Services, and Areas Green Technology Corporation. It was listed on the Nasdaq board of Bursa Malaysia on the 11th of July 2006. It all began in 1996 when Frontken Singapore, or FS, was founded by Yong Hwa Chun and Yo Lei Po. They worked in Tokalo and Schutzer Melco Singapore, where they developed the skills for material engineering and thermal spray coating. They then began with a staff size of 12 people and a rented factory floor space of 1,600 square meters. FS started with wire metallized spray systems, which was among the lowest range of thermal spray coating systems from the spectrum of thermal spray coating systems available in the market. In 2001, FS decided to invest in R&D on surface metamorphosis technology using thermal spray coating processes with an aim of establishing FS as a center of research excellence. Then by 2006, the FCB group became principally involved in the provision of surface metamorphosis engineering solutions for various industries, which include the semiconductor, power generation, petrochemical, and oil and gas industries. A little bit about the company's historical roadmap. In 1997, they clinched their first oil and gas client, which was ExxonMobil Exploration and Production. In 1998, they invested in the first HVOF spray system and started providing services to Alstom power generation turbine components. In 1999, their foray into the storage media industry became a reality when they secured Showa Denko HD Singapore and Fuji Electric Malaysia Sdn Bhd. 2002, they commenced R&D into surface metamorphosis technology, and in 2006, they listed on the Nasdaq Stock Exchange. In January 2012, FCB redesignated Ng Wai Pin as the chairman and executive director of the company. He is a lawyer by training and has been an independent director of the company since its IPO. The other key personnel that they have is Chief Scientist and Executive Director, Dr. Tay Kiang Meng, who spearheads the R&D effort of the company since its listing in 2006. Now onto their core business. FCB provides the following services using its surface metamorphosis technology: advanced thermal spray coating services, which is their core technology; advanced precision cleaning, recycling and refurbishment services, which is considered their complementary technology; and last but not least, advanced materials engineering and R&D support services. Now let me explain a little bit about Frontken's core technologies. Now, what is advanced thermal spray coating? It involves heating a feedstock like a powder or a wire or rod and spraying it at high speeds onto a surface that needs treatment. I know that's a mouthful. Just think of it as like painting but using a spray, and you're painting it using metal. Now, what is this used for? It actually protects the surface against wear and tear and extends the useful life of the equipment that is being thermally sprayed. Now, their complementary technologies are precision cleaning. Now, It's not using your garden hose and spraying. That's not precision cleaning. Precision cleaning involves a mixture of chemicals and techniques like spraying or immersion to clean particles that are invisible to the naked eye. And it is to remove contaminants that are deposited on the surfaces. These services are usually required for the high-tech industry, usually like semiconductor, aerospace, medical, and even oil and gas. I will now break down the revenue by geographical region. FCB mainly operates in 3 countries, namely Singapore, Malaysia, Taiwan, and they have a 4th category called Others. As you can see, Taiwan contributes the bulk of their revenue with 186 million in sales last year, 2019. They further divide their revenue segment by industries, namely semiconductor, oil and gas, and general, in which it covers power generation, marine, steel, wood processing, etc. Taiwan, being their biggest revenue contributor, is mainly contributed by their subsidiary Aries Green Technology Corporation. The semiconductor and wafer companies in Taiwan that Aries Green serve provide precision cleaning solutions for manufactured products and manufacturing equipments that help them make silicon wafers. They have built an excellent reputation for the costs and quality of their services with their clients over the years, and we see that as a strength of their business. Now I've finished describing their core business model. Do you think they have an interesting business model? Let us know what you think in the comment section below, and I'm looking forward to seeing them. Let's now analyze their financial statements. We begin with the latest annual report in 2019. In 2019, they increased their revenue by 4% from 327 to 339 million. But more importantly, they increased their net profit from 52 to 69 million, or an increase of 32%. Their latest quarterly results also show a similar trend, where their net profit jumped to 27 million due to a foreign currency translation of 9 million. In terms of cash flows, their net debts have increased by 60%, from 124 to 198 million. That's quite sizable though, but not to worry. They've also reduced working capital by 29%, but most impressively, increased their free cash flow by 90%, from 56 to 107 million. While they did reduce their capital expenditure by 28%, which helped their free cash flow increase, it is not a significant amount in reduction. In terms of cash and equivalents, they have steadily increased their cash balance to 219 million in 2019. This shows how prudent the management of the company is in conserving cash for unexpected events, and they are also a net cash company, as their cash and equivalents is now 219 million. Almost double that of their liabilities of 116 million. Now remember, they had an increase in net debts, but since they are net cash, it's nothing to fret about. A final rundown of their financial ratios would see that their net profit margins are steadily increasing over the years, in line with the chairman's statement of wanting not huge revenue jumps, but instead in steadily increasing margins. He stated in the past the dangers of growing sales at all costs, but not having the same growth in margins. Well, he has delivered. With the increased demand of electronic usage throughout our society, obviously the demand for semiconductor wafers will also increase substantially. The beauty of FCB's business is that regardless of the electronic end product, they will still benefit from the growth of the semiconductor industry because of where they are in the value chain, right at the beginning. So it doesn't matter whether the semiconductor wafer ends up in a phone or in a car, they will still benefit. For your information, the growth rate of the electronics industry is compounding at a rate of 5 to 6% per annum. and that's starting from a huge base. Secondly, for their advanced thermal spray services, they're offering these services to critical equipment in the oil and gas industry to extend the life of their existing equipment. Now, do you think that the oil and gas industry needs these services critically? Now I'm singing songs about FCB, right? But are they immune to risks? Definitely not. Because a big chunk of their revenue comes from the semiconductor industry. Should their competitors manage to snatch away their customers, especially in Taiwan, they will see a significant drop in their revenue if that ever happens. Second risk stems from their involvement in the oil and gas industry, where they've seen their fair share of downturns, due to the very nature that the oil and gas industry is very cyclical in nature. Low oil prices will see oil and gas companies putting on hold their maintenance services contract, and that will have a severe impact on FCB's businesses from that segment. However, despite all these risks that I've mentioned, FCB's management team have continued to deliver stellar results year on year, and we also hope that they will continue to do so in the near future. We hope you've gained better insights to Frontken Corporation Berhad before you make your investment decision. Please remember to give this video a like and watch our other videos on this channel. Do follow us on Facebook and Instagram, and see you in the next video.